I have with me Ms. Soni Patnaik, Naresh Mirani joining us on the show to talk to us more about the technicals of the markets as well, and Deepak Shenoy on the fundamentals. First up, let me begin by asking you, Naresh, what do you make of the market mood right now? We have recovered pretty much all the lost ground. All that Hindenburg saga didn't really have any impact on the markets. Does this seem like an indication that the worst is over?
So that's an indication there is no impact of the Hindenburg report, etc. But we are still in a consolidation mode. 24,000, 24,200 on the downside, 24,600 to 24,750 on the upside. So this should be the range going forward. Only when we start getting out of this range, then we get a 500, 700 pointer directional move. So in this period of time, time to be more defensive, because in a consolidation, we need to wait for new trends coming up. So sectorally, we are starting to see pharma as well as diagnostics and some names coming up onto our radar. But overall, still in a consolidation for the index.
Bit of consolidation for the index, but Deepak, what do you make of some of these good earnings? Voltas, well, we knew that it's going to be a very strong quarter given the heat wave, but the company clearly has surprised us further. And Jubilant Foodworks, wherein overall the like-for-like growth was just 3%, but what has got the street excited is perhaps that the decline has been arrested and now a turnaround is in store. Any comments on some of these urban discretionary plays?
I haven't seen Volta's results, Anisha. I think there is I mean, it's interesting because you had a heat wave and India needs a lot more ACs. The fact that even a 28% GST doesn't deter them is good. But I think at some point we'll kind of realize this, saying that, we can't have, heat waves like this hurt our population that much. There are countries that are hotter but have just a lot more air conditioning. So that way, I think positive about the long-term future. We haven't got the stock in our portfolio, but the whole space is interesting. For Jubilant, it's a relatively expensive stock. So I think even with the earnings that has come in, or with the change in this, I think I would say it just remains a little bit out of our radar by saying we can't. If this valuations were falling to about 30 or 35 times earnings in 5 or 6 years, I don't think this would be a meaningful return for investment from here, despite seeing that the scope of growth is quite good. I don't see them growing 50 to 70% for CAGR from here for the next 5 or 6 years. So not really interested in Jubilant Foods per se.
Okay, that's the take coming in on Voltas as well as Jubilant Foodworks. In the meantime, Soni, hi, afternoon. Let me get you in as well. Does it seem like this recovery is sustainable? It was a sharp knee-jerk reaction and then that got covered into, but does it look sustainable to you?
Hi, good afternoon. Thank you for having me on the show. I think Nifty, irrespective of whatever the news were over the weekend, on Friday, it had given a decent close. And any move above 24,350, it was indicating that it can head towards 500, 550 odd levels. Just shy away from that 24,500. Today we saw 24,470. So I think that that could be a bit of a crucial resistance to cross right now for Nifty. If it's not able to cross, you may see a bit of a profit booking again to back to test the lower support levels of 24,200, 250 odd levels. I think this is how it's playing out right now. It's in a consolidation mode, for broadly speaking. Likewise for Bank Nifty as well, we can see, it had an expected short covering move above 50,200 towards 50,800 or so levels. But right now it may see some resistance towards that 50,800 to 51,000. I think that's where, it's holding out a bit of a call writing. We can see the addition still taking place. So it's important for both of these indices to cross that level to see any further upside. On any downside, it may only get its recent support tested. So it's not a lot of panic either from current levels. Maybe a buy on dip strategy would work out better for both the indices.
Buy on dips. Let's see whether we get those dips or not. But Amara Raja is one stock which is firing away. Not to forget the fact that the stock has run up quite considerably this year. Let's pull up the year-to-date chart, and that will tell you the kind of big move that it has seen already this year. Deepak, what would you do with this stock if you've missed out on the rally and not bought into, let's say, the Exide and Amaras of the world? better to just, stay aside and not participate at least at the current levels?
So we own Amara Raja, so not very unhappy about the move. We've owned it for a while now. But I mean, I would still say look at this as a pretty interesting play in a game-changing area. You're looking at batteries becoming one of the most important parts of a car, rather than just one small 7 or 10,000 rupee kind of, or even a 5,000 rupee kind of element inside a car. You're going to see it being a substantial portion of a cost of a car. And if you have the network that Amar Raja has, and so does Excite, for instance, and there's also the OEM links that they have or they're building. Plus, they're moving into EV in a slightly different but better way. I would say long term, this bodes well for us. In the short term, markets can be very volatile and very punishing, especially if the broad markets fall. So I'd say if you have a 5-year horizon, you might want to look at this stock as buying in small pieces over a longer period. That's exactly what we've done. We've been buying for the last, I think, 2 years plus on this stock. So that would be the best way to play it, not to say that today's investment and let's look 3 months from now. It's a longer term story. It'll evolve over time.
Deepak, what are the other additions that you've made recently? Anything new that you've either added or looking at?
We've not really decided on additions yet. We're still, there's some results waiting to come in, but much of our larger plays we continue to be excited about. I think LIC itself, one of our largest plays. This year onwards, we're going to see some increase in revenue from in the fourth quarter, because their share of participating policies increases from 7.5% to 10%. I think so. There's that will kind of adjust, and plus they have increased their non-participating policy share to 25%. They were at 10% a year back. So that way, I think continue to build on that position. We haven't added a whole lot more. In fact, in the run up in the last few months, we've actually cut down some of the public sector shares that we've owned, primarily because they got too big. So some of the RVNLs and maybe a Mazgaon dock, because they're positionally they've become too high. But we're waiting to deploy cash. There's very little cash, but the deployment is for a new stock hasn't yet happened in this quarter. Hopefully next time I'll have something better to update.
Okay, we'll wait by to hear where do you deploy next, because perhaps a dip is imminent and that is when you will buy perhaps those stocks for which you have the shopping list ready. But for now, the market has conquered that mark of 24,400 quite swiftly, and we are holding above that mark, at least at the moment. We're talking about how some of the public sector entities have come off quite meaningfully. Amara Raja, of course, is holding up, and in fact, Inox Wind as well, doing quite well. Let's listen into a slice of the conversation, because we managed to speak with both the managements, Amara Raja as well as Inox Wind, right there in the premises of these companies. Here are what the managements had to tell us.
We have publicly stated our vision is to get to 2 gigs. Without specifying timelines, I think it's in the near future that we're going to get there. Obviously, depending on how large the Indian market becomes, if it's going to be closer to 10 gigawatts, which we think it should be by 2027, I think we'll take a larger chunk. We have the what I would call, we have the right to win. Our break-even costs today are negative. Along with our O&M business, even if I sell 0 megawatts, I make money. I'm not saying we won't sell megawatts. We're gunning for such massive numbers now that effectively I'm probably the last man standing in the industry. And I think that's been true even when the industry went through hell. We're probably the only player which survived with 0 haircut to any banker or creditor. I think on the Inox Green side, it's a natural play of Inox Wind as well. We have stated in the next 3 to 4 years, we want to make it a 10 gigawatt play. Frankly, I think we should be doing it much earlier than that. We're evaluating a lot more opportunities, not just O&M now, because the canvas within O&M is limited in terms of what we can acquire in the market. Organically, we're growing so rapidly, and we're looking at virtually all the inorganic pieces available in the market.
the first gigafactory production at the moment, we're looking at the end of 2026 to come into the market. It's going to be approximately 2 gigawatt hour of NMC capacity, followed shortly thereafter by about 4 to 6 gigawatt hour of LFP. Overall, about 1,500, 2,000 crore, largely going to be covered by internal accruals.
Okay.
From day one, we're pretty clear that phase one, let's do internally. Let's not really look at any alternate funding because we think we can do this and that we don't want to really open the books unnecessarily right now. But going forward, it's about almost 10,000 crores of investment. That's more in this next 5 years than we spent in the last 40 years as a group. So the risks are higher, the amounts are higher. There's a lot of options, whether it's equity, debt, IPO. I think everything's on the table, but we'll exercise those options as we get there.
Welcome back. A lot of stocks which are reacting at the moment right now. You of course have on the gaining side, Inox Wind up 19%. Rail Vikas Nigam has shot up quite nicely as well. Titagar Wagons is the other one that we are watching out for, and BKG, Glenmark Life, HFCL, these are some of the other gainers in the trading session. On the losing side, Birla Corp, KFin Technologies is finally cooling down a bit, and Bharat Dynamics of course has been under pressure. But we are watching out for the latest news flow that we are picking up. So my colleague Prakash had talked about how Oil India and ONGC have reached out to the ministry to take back the windfall tax, and on the other hand there's also the news coming in that allocation of gas produced from new well intervention at 20% premium over the APM price. That's the word coming in as far as ONGC is concerned. The stock has shot up quite considerably, but let me take it across to Somit to understand what exactly does it mean. Somit, we understand this text that we have got, the single line, but what exactly is the implication for ONGC as well as the gas users?
Well, if you see this announcement, ONGC management was expecting this announcement to come in anywhere in mid FY25, but it has come in a bit earlier than what they were expecting. Now, currently, if you see gas prices in India for the domestically produced gas is fixed at around 10% of crude prices, which means that if crude is trading at around $80 per barrel, then the domestic gas prices would be around 10% of that. But there's an upper cap of around $6.5 per MMBTU. However, whatever gas ONGC will produce from the new wells, they can charge a premium of nearly 20% over and above the currently charged APM gas prices. So if the APM gas price is around $6.5 per MMBTU, a 20% premium can be charged for gas which have been produced from this new wells. Now for FY25, if you see the incremental contribution to the EBITDA could be very less at around just 1 to 2% upside as per analysts. But for FY26, nearly 20% of the total gas production expected by ONGC is expected to come in from this new well. So a higher EBITDA number can be expected from ONGC in FY26 because the contribution of new wells for gas production in FY26 will be much higher at around 20% as compared to a lower number that we are expecting for FY25. So all in all, it's a positive announcement. Though it is on expected line, it has come in a bit earlier than what the management was expecting, and obviously this will boost up the company's FY26 EBITDA significantly as per analysts. But also do remember that this will be negative for city gas distribution companies because they source in this domestically produced gas for supplying gas to CNG and for domestic PNG purpose. Now CNG is the most profitable segment for any city gas distribution company, and if they're not able to take a price hike and pass on this increase in gas cost to consumers, then definitely their margins will take an impact going forward.
For that, for now the stocks, that is the city gas distribution names, are also holding in the green despite that increase that might come for their intake or the input for them. Not sure if they're going to pass it on or not, but ONGC is the stock that we need to talk about because that's seen quite a bit of spike. So the announcement coming earlier than expected, of course, would have been a boost for FY26 earnings as it is. Now FY25 also gets a larger boost, and that's the reason that stock has shot up suddenly 3.5% right now. In fact, while we're talking about the energy names, let me take it across to Prakash as well because he also has picked up some interesting story out there. Prakash, tell us what you have picked up from your sources.
Yes, we are learning from our sources that the Oil Ministry has approached the Ministry of Finance regarding windfall gains tax. We are given to understand that the Oil Ministry has asked for the withdrawal of the windfall gains tax on petroleum products. In fact, several presentations have been made in the Finance Ministry, and the Oil Ministry is now recommending for its immediate withdrawal on back of reduction in crude prices. Crude prices have been below $80 per barrel within hovering within a range bound for quite some time. Therefore, Oil Ministry is now requesting for the withdrawal of windfall gains taxes. In fact, it also believes that the crude price is likely to go further down. Along with that, it has also made 3 to 4 rounds of presentation to the Finance Ministry on the impact of windfall gains tax on the investment of oil producers. And the Oil Ministry is also of the view that the oil companies are not making any windfall gains if the prices are below $80 per barrel. Therefore, these recommendations have been made. And if it happens and the government decides to withdraw windfall gains taxes on petroleum products, that is going to help to the companies like ONGC and OIL. As you are aware that the Finance Ministry has revised the windfall gains tax on petroleum products to rupees $2,400 per ton effective from August 1. But the government has not been levying windfall gains tax on export of ATF, petrol and diesel for the last few months. And therefore, these recommendations have been made. In fact, the sources are confirming that the Finance Ministry is considering this proposal, but it has given no timeline for the withdrawal of windfall gains tax.
Okay, that's all that there is in oil and gas. Deepak, curious to know whether you caught on to ONGC on time or not. Quite a few triggers in place now.
No, not really. We are still long reliance, so in that sense, we'll benefit if there's a reduction in windfall gains tax, but not the other one, which was the increase in tariff that they could do. I don't think that's going to be much of a reality, because in the end, if it means you and I have to pay more for our gas usage, it will add into inflation, and that is a political issue. So I don't think they will be able to translate it meaningfully. But the windfall gains tax has a bigger impact. So we don't have ONGC in at least the fundamental portfolios. It has been a part of our momentum portfolios, but that's more based on the prices rather than on fundamental action. So I don't think we would have missed it, but I'm sure you can't get all parts of a rally, so you'll get only maybe 30-40% of whatever big move there is.
Right. Naresh, so let's check in on the momentum. How much more to go from the 341 levels on ONGC?
So that would be a fresh new all-time high for the stock if it sustains about 345 mark. And overall, the trend is positive, so it could continue to catch up towards the 400 mark eventually. And if you look at what has happened with Oil India, that has outperformed in a meaningful way over the last 1 year. So ONGC has a lot to catch up. So technically, a strong breakout about 345 is possible in the short term.
Taken. So yes, Oil India this morning only we were discussing that CLS has downgraded because the run-up has been quite sharp, and premium to ONGC has increased considerably, and we were wondering whether ONGC is going to catch up or Oil India is going to come off. Looks like it's ONGC which is going to catch up. But Sony, a lot of these real estate stocks are doing well in the trading session. Take a look at Mahindra Lifespace, suddenly managed to perk up. Lodha was doing quite well from the start of the trading session as well. Any fresh buys within this pack that you would recommend?
I think, from the entire space, we can see, look at Godrej Properties, which is looking strong. It has given a good breakout above 2900 in option chain. And going forward, it can test 2980, 3000 as a higher side of a mark. So I think from current levels, one can attempt to buy at a small risk of 2915 as a stop loss and keep a target of 2980 and a sustained second target of 3000.
Okay, point taken. So that's a view coming in as far as some of these stocks are concerned from the real estate pack. In terms of the other gainers, we are watching out for Inox Wind, as I talked about. Voltas has had a solid show. Titagar Wagons is the other one that we are watching out for. But insurance data is also out, and we had seen, of course, the general insurance data being quite good. But today, life insurance data also has come out. We know Deepak, of course, has his bias towards LIC. He's been holding it for a long time. So let me take it to Naresh and ask him, where is the bias when it comes to insurance stocks and even AMCs for that matter, because Nippon etc. reported very sharp jump in AUM with respect to the AMFI data that came out Friday. Naresh?
So the bias would be on the HDFC names. If you look at HDFC Life, it's made a strong comeback over the last 2-3 months after going below 550 odd levels. The stock is now at almost a 1-year high. The all-time highs are around 750, 770. So that's the next upside. So on the insurance side, HDFC Life looks interesting. On the AMC side, again, it's HDFC AMC. which has been sideways around this 4,000, 4,200 mark for the last almost 3 to 6 months. All-time highs here as well. The last time the all-time highs were closer to 3,800 back in 2019-20. So out there, it would be a fresh breakout of 40 to 20 levels. So it looks like a breakout possibility going forward. So both the HDFC names looks interesting in insurance as well as AMC.
Right, okay, that's the take coming in on some of those insurance plays. Today, of course, you can't take your eyes off from a Voltas and a Jubilant Foods. They are the ones which are actually holding out very smartly. Amongst the large caps, we've discussed ONGC already, Hero MotoCorp, Axis, Infi are the other ones which are also looking good. But Deepak, we'll let you go on that note. Thanks as always for taking the time out and joining in. Let me quickly get in some closing trading ideas as well. Soni, let's have your list, your closing trades.
So the first would be a buy in Gale, which is looking good with long filter positions and a good breakout also, with one can attempt from current levels. So 235 is a level above which the breakout can happen. So one can accumulate at this level, and on 232, 233 is a level to buy Gale. Keep a stop loss of 225, a target of 245 can be seen in Gale. The second buy comes in Exide Industry, which is looking about like it can, bounce back from current levels after a certain fall that we've seen in the particular stock. So any move over 505 can see short covering in Exide Industries towards 520, 525 levels. So one can accumulate to buy at current levels, keep a stop loss of 488 and a target of 530.
Naresh, what about your closing trades? Anything specific that you are pointing out or looking interesting on the charts?
So that would be a buy on HDFC AMC, and the stock is making a flag formation very close to a breakout right now around this 4,200 mark. The recent swing highs are around 42.40. So expecting this to break out in the coming session. So that's a buy in the near term.
On that note, let's take a very quick break. So far, so okay, although we flattened out completely on the index. So let's figure out what direction the index takes in the next half hour.
If you like this video, then like, share and subscribe to ET Now.